Millions of Canadians don't earn capital gains, so it's okay to be unfamiliar with the phrase. Now, let's say you own a rental property or shares inside of a corporation, and if you sell that asset or investment for more than the original purchase price, it's called profit or capital gain. The new budget basically changes how that money, that profit or capital gains, is taxed. It has been met with a lot of praise, criticism, and frankly, a lot of confusion. The new rules would take effect on June 25th. Today, individuals and corporations are provided the same capital gains exemption. In the event that an individual or a corporation were to sell an asset, stocks, Bitcoin, they were to sell a cottage or a rental property, they would be taxed at 50%. There is a 50% capital gains exemption that applies to both individuals and corporations, meaning as follows. If one were to make a $100,000 profit from the sale of an asset, they would be paying tax based on their marginal tax rate inside the corporation or as an individual on 50% of the profits. Come June 25th, the rules change for individuals and corporations. So for individuals, if up to the first 250,000, there will be no change. There will be the 50% capital gains exemption. Any profits above $250,000 will be increased from 50% to 67%. Let's run an example now to make it clear. So, with the new rules come June 25th, if an individual at the highest marginal tax rate were to sell an asset, a rental property, and they made $250,000 of profit, the extra tax paid would be $0. To an individual who makes $300,000 of profit, the extra tax paid would be approximately $4,400. To an individual who is in the highest tax rate, marginal tax rate, and makes a $350,000 profit, the extra tax paid is approximately $8,800. And for a whopping $500,000 profit, the extra tax paid would be approximately $21. Let's look at the rules, how they change for a corporation. So a corporation, instead of all profits being taxed at 50%, they're changing it now to 67%. Okay, so inside a corp, you're going to be taxed on 67% of your profits. Typically, inside a corporation, your tax rate is a lot lower, about 15%. So you will be paying tax on a bigger portion of your profits. For the average individual who holds a rental property or two and might make $500,000 in profits, I read the numbers on a $500,000 profit inside a corporation works out to an extra $25,000 of taxes paid. For individuals selling their principal home, there is no change. So if you made a profit selling your principal home of a gazillion dollars, there is no taxes paid on the profits. You get to keep it all tax-free. These are the facts. Who you work with matters.